I just sold my shares in UNH stock for a 40% gain, and with those profits, I bought into an oil stock that I believe has massive upside potential. This company, Berry Corporation, is trading for only 4 times free cash flow. And the crazy thing, there are tons of companies in the oil sector with similar valuations. In this video, I'm going to break down why I believe the oil sector is dirty right now, the macro trends driving my thesis, and the specific stock I just bought, Berry Corporation. Of course, there are risks in this sector, and we'll cover those too. To understand the opportunity, let's quickly break down how the oil industry works. And there are 3 main segments. Upstream, these are the companies that extract crude oil from the ground. Midstream, companies that transport oil, usually through pipelines. And downstream, firms that refine crude oil into usable products like fuel, diesel, and gasoline. Big players like ExxonMobil operate across all 3, but many smaller companies focus mainly on one area, typically upstream production. And right now, these smaller upstream producers are trading at incredibly cheap valuations. Let's take Berry Corporation as an example. In their latest presentation, they reported 28% free cash flow yield. Many of their peers are also in the 20% plus range, meaning these companies are producing enormous amounts of cash relative to their market value. Another great valuation metric for oil producers is enterprise value to EBITDA. Quick refresher, market cap equals value of the company's equity, and enterprise value equals the market cap plus debt minus the cash. Basically what it would cost to buy the entire business. Berry is trading at just 2.7 times EV to EBITDA, while many peers are between 2 and 4 times. That's extremely cheap by any historical standard. Of course, oil producers have always traded at lower multiples, but these numbers are still unusually low, even for this sector. Looking at the last 20 years of inflation-adjusted oil prices, we're currently in the lower part of the cycle. It's not rock bottom, but even at today's levels, companies like Berry are still generating double-digit free cash flow yields, often over 20%. Now imagine what happens if oil prices move from around $60 per barrel, today's low end, to $80. Not even a crazy number historically. At that price, many of these small producers could become multi-baggers. But to really understand the opportunity and the risks, we have to look at supply and demand. Oil and natural gas still make up the majority of global energy, and when you include coal, hydrocarbons account for roughly 87% of total energy consumption worldwide. Renewables are growing fast, and that's great, but solar and wind can't yet power a stable modern grid on their own. They're intermittent, and we still rely heavily on natural gas for consistent base load energy. Nuclear could be a long-term solution, but political resistance has slowed its adoption. Meanwhile, global energy demand continues to rise year after year. 10 years from now, we'll be using more energy than we do today. According to the EIA, renewables will grow, but petroleum and natural gas use will also rise through 2050. The OPEC even projects global oil demand won't peak until 2050. While demand might decline in North America and Europe in the 2030s, India, Southeast Asia, and the Middle East are expected to more than offset that decline. So the bottom line is, oil consumption isn't going anywhere anytime soon. A common pushback is, what about EVs? Won't they kill oil demand? Probably not as fast as people think. In the US, even with more EVs and hybrids on the road, gasoline consumption per car is actually higher today than it was 20 years ago. Here's my thesis. Oil companies are massively undervalued right now. If oil prices rise even moderately, this stock could deliver tremendous returns. And in a market where many US stocks are overvalued, the oil sector offers rare value. I hope you found this video valuable. Let me know what you think about oil stocks in the comments, and I'll see you in the next one.